This is the top 4 ICT concepts that you need. I don't care what anyone else has to say. These are the only ones that you need in ICT to make a profitable strategy and actually be successful in the market. It's buy-side liquidity with sell-side liquidity, of course, market structure shifts, inversion for value gaps, and SMTs. Those are the only ICT concepts that you need, and I'm going to cover them in this video, and hopefully very short because I don't want to make this video too long. So let's dive right into it. First thing I want to note is right over here, I have a little demonstration, and then we're going to hop into live examples. So over here, what do we have? A manipulation leg. So marking out this manipulation leg, why do we call it a manipulation? Because we manipulate people into thinking we want to go lower. You can also call it a sell side liquidity. Sure, not a problem. But what creates and what goes after it is what is like the icing on the cake, which is the market structure shift. So right over here, market structure shift. Now you can take your entry for a long position, and we confirmed a trend change. So that is very, very important to note. Another thing, sell side or buy side liquidity. Well, right over here, this is sell side liquidity. Why? Because this was a previous low in the market. We come up, come back down, take out all these sellers. Now, a lot of people that wanted to actually take a long position over here, they did. Where are they going to put their stop loss? They're going to put it right over here below this low. So price comes up, price goes back down, sweeps out all of this sell side liquidity, all of the sell stops, buy stops, you name it. There's a bunch of liquidity, a bunch of money in this area. And what happens? We have a very strong rejection in the opposite trend. Now, another thing, that's sell side. Also, same thing goes for buy side liquidity. We have usually a sweep and then a push lower. Another thing, now we have inversion for value gaps. So inversion for value gaps is pretty much like a fair value gap, just inverted. So over here, we have a fair value gap. Since we're respecting it, we're coming back in, tapping into it, and then having the rejection higher. Over here, we actually have an inversion for value gap where we break right through it and then continue our trend higher. So this is pretty much a quick run in the market that left unfulfilled orders. They go back, take those orders, and in this case, we ran right through it, calling it an inversion fair value gap. Last but not least, we have SMTs. SMTs work between NASDAQ and ES. It's going to be much better when I explain it with the live examples. But pretty much we're going to have ES on this side over here, NASDAQ on this side. What are we doing between these two lows? Well, over here we make an SMT, which is an incline. Over here we make a decline. So what is that telling us? There is a indifference in the market because NASDAQ and ES are supposed to follow each other. Think of it as boyfriend and girlfriend walking down the street holding hands. Well, the second they release their hands and they're angry at each other, there's a problem in the market. What do? Have that strong rejection upwards. Vice versa goes right over here. Same thing from the tops. We have the rejection, strong rejection downwards. So let's hop into the live examples. So pairing everything together to make a profitable strategy, right over here, what do we have? We have a sell side liquidity, not manipulation. We have a sell side liquidity. Let's just go back time a bit right over here. We have sell side liquidity. Now, what else do we have? We have a SMT between NASDAQ and ES. What's another thing we have? We have a fair value gap. Now, I know you might say, hey, Alexander, this is actually 5 ICT concepts. Well, fair value gap inversion, I count it as 1 since it is technically the same concept. So we have 1, 2, 3. What's one thing we're missing? The market structure shift. So let's go down to the 1 minute time frame. Let's see, where is our market structure shift? Well, there's nothing on the 1 minute, so let's go to the 2 minute right over here. Look at that. Market structure shift. Well, in this case, this is the manipulation. Market structure shift is right above over here. Where are we going to take our entry? We're going to take our entry right over here at this inversion for value gap. So in this case, take these buys, stop loss right below these lows. Why? Because it's an SMT low. It's a protected low. So pretty much saying if we were to actually fake out this inversion for value gap, come down, take out the stop loss or below these lows, then I would not be interested in this trade because I think we just want to continue lower. So That is that. That's why stop loss goes right below there. Now take profit. Where am I going to move it? I'm going to put it to a -2 standard deviation. So let's drop that right there. I've never said that word in my life, actually. So what are we going to do? Right when we come to this market structure shift, we're going to go break even. Well, not technically break even because this was supposed to be our entry point right at this break of the inversion for value gap. But since it was such a strong candle, we only enter our candle closes. We got a little like chipped over here. So we entered here. So market structure shift, also known as break even, which is very, very nice to know. What do we do? -1, slight little rejection, perfectly fine, as we always do. And we continue moving very close to the -1. We pretty much like just, there we go. That's a strong tap. And we get fulfilled on our order. So as I said, look at the hourly time frame. Higher time frame, sell sides, fair value gaps, yes. And SMTs, very, very important in the market. Then come down 2 minutes. Well, what do we have? Inversion for value gap, also very important with the market structure shift. Guys, these are the only 4 ICT concepts that you need to make a profitable strategy. I don't care what anyone else has to say. You do not need any type of other indication. Order blocks, sure, use them. Is it needed? Do I ever use them? No. Like, guys, stop like fascinating saying, oh my God, I know every ICT concept. No, you don't need it. Just find the ones that make the most sense and stick with it. So I hope you guys understood. If you guys do need more help one-on-one, I have a mentorship down below. I have a free trial, so don't jump on me for trying to make money off you guys. It's a free trial, so go check it out. I'm not going to charge you anything. And if you do want to stay more on the free side, I have a free Discord down below, completely free, just a place to chill with like-minded people, other day traders, and to kind of have a talk and share ideas. So I hope you did enjoy this video. I hope it made sense to you. Leave a like, subscribe. Let me know in the comments what you think. And I hope you have a beautiful rest of your day. And I hope this video made sense.